Happy Monday. Nice to be with everybody. We have a busy week ahead. This is going to be a pretty wild week, but it'll be an exciting week. So let's see what we have here. Give me one moment. There we go. Okay. So just taking a look at the SPX this morning, things are pretty quiet. We had a gap higher, pretty calm. Going to the week itself, a lot of stuff to get ready for. This is a snapshot of earnings. We've got some notables. The big ones I'm looking for is really in the meat of the week being Tuesday, Wednesday, Thursday. We have Google, AMD, Snap, which I have some exposure in. Did a little buy. I actually just bought shares of Snap looking to see if we push higher. Let's see here. Some consumer ones. Pfizer, I've got some exposure on for Tuesday morning. McDonald's, which has the E. coli breakout. We might have an opportunity to buy McDonald's on a dip, maybe. Eli Lilly, big one on Wednesday. Caterpillar, kind of global economy and growth on Wednesday. That's before market open. Microsoft, Meta, Coinbase, probably some big volatility around all three of those. Robinhood, take it or leave it. Carvana's been on a tear. I'd like to see a pullback in Carvana if possible. Maybe with rates going slightly higher in financing, that might affect their stock price. I'm not sure. Starbucks, meh. And then Thursday, Apple and Amazon, the big ones. Intel, another legacy stock play. Legacy Tech, MasterCard on Thursday before market open. We've got Norwegian Cruise Line on Thursday. We have Royal Caribbean on Tuesday. And I'm not sure if Carnival's in there somewhere as well. Chipotle, Tuesday, I noticed that one. I once Chipotle did like a crazy split. I mean, I've got some ratio spreads on Chipotle where I'd take some shares of it. Otherwise, it's a busy week. We've got over 800 stocks, and then we got big energy on Friday with Chevron and ExxonMobil. So it should be enough to move the markets. And you just got to wonder, with 800 plus companies reporting earnings this week, are we also going to see a lot of direction, or are we going to see a lot of noise? Because what's happening next week? Okay. This week we have lots of earnings. So 800 plus companies reporting earnings. We also have US PCE this week. We have US GDP this week. Then we'll have our US non-farm this week. What else? We have the ADP numbers. We'll have unemployment claims. So that's a pretty big week. But you go into next week, we have the U.S. election. U.S. election. We have the Fed. So I think that it's nice to have cash at the ready. See if we have any good opportunities. I'll probably take a couple of stabs on some earnings. Make it very risk defined. So if it's good, it's good. If it's bad, it's small. But I'll take a couple of stabs. I'm ready for like this to be the dust that's going to get kicked up that we have to navigate, and we will see how the dust is settling for us to make some decisions for the rest of the year. If all this is noise and then the market actually catches some traction for the rest of the year, that's a lot easier than trying to get super aggressive in here and get beat up by a bunch of chop. Okay. Am I watching Ford? Yeah, I'm watching Ford. I've got some shares of Ford. Ford's at 11.23. I mean, I'm not sure what else there is to watch on Ford outside of buy a put to protect yourself if it tanks to the downside. Otherwise, we push up to the same range highs in the $13 to $14 zone. I do have some exposure. Actually, it's not a bad spot to look. Ford is aftermarket today, I'm assuming. Yep. So today's the 28th aftermarket. Hopefully this is inexpensive, but let me take a look here. So I have some. Let's see. Let's go this account. Ford. Have 200 shares. Maybe buying something to be on the safe side. Ford earnings today after market close. Yep. All right. So if I went out to the options chain, bought one for Friday, if I buy a put, I could buy a $10 put. I mean, number one, we're only expecting about a 70-cent move to the downside, even with earnings and everything. I can price this out, but if we have some big shock to the downside, I mean, if I buy a $10 put, it's $1.20 out of the money. But if this happens to be something that pushes down towards $10, I mean, I could turn just to be protective. I mean, if it goes up, great. I don't want to cap it necessarily. If it goes down and it costs me 8 cents to buy a put and price goes down towards $10, I could turn an 8-cent put into maybe a 30 to 40 cent credit. So I could lower my cost base. I think that's worth it. Okay. So I think I'll do that. I've got some shares here. I'm going to cover those shares with the put at $10. So I'll cover it there. Quantity 2, pay 8 cents for it. If something if it doesn't help me, it doesn't help me. If it does help me, then maybe I can turn it into like 30, 40 cents credit. That'll at least lower the cost basis a little bit, and I'll just sit on for a little bit longer. So 8 cents, see if I can get in here for 8 cents. Easy. That was 8 cents. Okay, so I've got a little protected play there. And then this account has 600 shares with no cover. So that's this one. Same thing. So 600 shares, no cover. And I'll go 10 and cover all for 8 cents. There. So Ford, just put some protection in. That's all. So this isn't a trade. This is a trade for me of already owning shares, but I'm not doing an earnings play on Ford. But basically what I have is I bought a 11. Oops, go text box here. So 11/1 expiration, $8 long put for 8 cents. And I'm just protecting all shares. So if we have a pop to the upside on Ford, $12, $13, $14, that'd be a huge surprise. This put is going to be worthless. It's not going to help me at all, but having the shares actually jump up would be good and helpful. What this is going to help me do is if this does drop and we hit this low or we go lower, it's just going to help me protect over the next 4 days for expiration. That's all it's for. Okay. The other ones I want to take a look at, Amazon. This one's out through earnings. I have a long put at 160. I think I might do the same thing here just to be safe. Amazon, I've got quite a few plays on Amazon. So if I go look at the portfolio today, Amazon, and a lot of it is so far lower that I doubt any of this is going to be threatened. I mean, right now I'm up about $9,900 on Amazon without owning a single share. A lot of it's just been earnings, or I'm sorry, it's been option plays, ratio spreads, bull put spreads, all sorts of different income strategies. But I do have a couple of accounts that do own Amazon, and I think in order to protect that, if needed, and let me check here, I know I'm protected out through the first. So let's go to this account, get logged in. There we go. Okay. So I own Amazon, and it is a 160 put for this Friday, a 210 covered call for the end of the year. Still up about $9,500 on that. I've given back some on the long put, but it was a necessary trade. I mean, if we have a push lower, I mean, 160 is way down here. So we'd have to have a huge miss on Amazon, but it's there in case I need it. And let me see actually what it looks like if I bought something now, because I bought that put quite a ways back. That would have been like in the summer. Let me see what maybe the 8th or the 15th looks like. It's less time. Let's see the one. So I could buy it for basically $100. I could protect all my shares, and that gives me a couple weeks if this continues to push any lower. So that's not too bad. I think I'm going to do that. I'm just going to spend the extra money on it. 160. I'll go out a little bit further. So I'm going to buy. I've got the 160 put that expires this Friday on Amazon. I'm covered up to 210. I still like Amazon longer term, but I want to get a put out a little bit longer because I don't know if that's going to pay me anything. If we drop, let's say the expected move is $14, we go from 190 down to 176. That might move my credit up a tiny bit, but it's not going to help a lot, especially on the 9 or the 11/1 expiration. I mean, this is essentially trading for 14 cents. It's almost worthless, you know. I mean, my initial trade price on this was, I'm trying to look at my trade price. I guess I got into it for about $1. Now it's trading for 14 cents. So it is what it is. But I'm going to add another one. So I'm going to go the 11:15 expiration 160. It's going to cost me a little bit of bucks. It's going to cost me about $100. I can justify that. So let's trade. Look at Amazon. Okay. So I'm buying a put and I'm buying 2 contracts out to the 15th. The 160 cost me 55 or 56 cents. Good till canceled for 2, cost me 112 bucks. All right, review and send. Okay, filled. Okay, they just got filled. Cool. All right, so Amazon got filled for a bit more protection. If I look at the stock itself, let me see what I might take a couple stabs here. Look, we have earnings this week on a ton of stocks, including some of the Mag 7. If I was down here, I would say way more likely to do a bull call spread. I mean, I'm expecting to see earnings be relatively solid. So we had a revenue miss on Amazon here, and that obviously caused a big drop to the downside, but the market's stabilized and pulled back. Let me see what this is expecting to see here. So, I mean, we know Amazon makes a ton of money. 1.26 earnings per share to 148. So 1.138 earnings per share. That's a slight downward trend. Revenue going higher. Revenue going higher. EPS going higher. All right. So trend is still on its way. Expected growth. Let's go to Amazon. Look at their analysis. Go to their growth estimates. Current quarter, current year, next 5 years. I mean, this is why I like Amazon long term. Their growth estimates just still look pretty solid. I mean, it's reducing, like current year at 63.1, next year at 22, but the year after that, 31.75%. It's just solid. I mean, Amazon is solid. I know there's competition. I mean, everyone's heard of Temu now because it's everyone's social media, maybe Shein or some other ones, but I still think Amazon is pretty solid. But that's me. So do I like it enough to take a trade on it? Well, let's find out. If I did a November 1st and I buy a 190, so I could spend $1.20 to get $1.35. I don't mind that trade if we go higher, right? We're trading at 190. I have to buy the 190. If I put it one strike lower, it's going to be a bit more expensive, right? That's about a 1-to-1. I risk 130 to make 120. But if we have any type of positive movement on Amazon, which earnings should be Thursday after market, that would essentially say if we go higher on Amazon, cool. So I mean, I'd like to see Amazon push higher. We need it to literally go up by about $2 to $3. The expected move is $12, $11 and change. Do I like that trade? I do. So here's what I'm going to do on Amazon. I like the trade enough that if we go higher, we'd make about $1.35, risking about $1.15. If it goes higher, good. We can close it out Friday. If it pushes higher, we can close it out for, it's a max 250. So if we close it out at 245, 240, similar to what we did on IBM and at UPS, it worked the same way. Okay. And I would do this on the trade. If I take the trade here and I just do one contract and it goes down, I'll probably take the same trade, go out to November or December or January and take a 2 contract trade and just see if it goes higher for a 2 contract trade. So this is more of just a little earnings play. All right. Can you buy simple option calls or puts on Tasty? Of course. You can, I mean, you can go as basic and simple as you want. If I want to buy a call, though, this is the problem. Not the problem. I mean, it's just this is just why I typically use defined risk strategies. If I buy the 190, it's going to cost me 600 bucks per contract, and if I'm wrong, I lose all of that. If I lose on this contract, I'm losing 115 to 120 dollars. Not a big deal. If I went slightly in the money, I can make this even cheaper. 192 by 195, I pay a dollar, and I potentially make $1.45. What does price have to do? It has to go up about $5 or $6. And is it capable of going up? Well, I mean, expectation this week is that we go up by about $11. Or I should say we have a movement of about $11. So I'd like to see if I can get filled here for about $1.15. $1.15 debit. Let's see if I get filled. So $1.15. Let me see if I can finesse this a couple of cents. $1.18 still gives me a slight edge with a favorable reward to risk. Filled at $1.17. Okay. So I'm taking the trade for $1.17 on Amazon. And I'm keeping the risk small. Okay, so Amazon is in. I'll add this into my Pulver Alert section for the A1 Trading Discord. That's an update in the stock options trade section. Amazon, 11/1 expiration. So I'm risking $117 per contract to make $133 per contract. And earnings is Thursday, which is 10/31 after market hours. Okay, trades in for Amazon. It's bigger. Let me take a screenshot of this. All right, so that's that. I'll add those images in just a moment. What else do we have here? We have Microsoft this week. Microsoft, I already have this trade in, so I don't really need to play earnings when I can be longer term and see if Microsoft goes higher. So earnings itself, here's what I will say. If Microsoft dips on earnings, I'll probably put in a similar trade at different strikes and then still put out a November to December expiration. So I like Microsoft, but I already have some exposure in that one. Google, same thing. I already have exposure in this one. So Google is up as we come into earnings. I went out 12/20 and 117 expiration. So those go a little bit further out. Intel trading at 23, potential gap fill here. I mean, let me see what this one's going to cost. Intel's not too bad. Hopefully it's cheap. Intel has Thursday market earnings. If we go to the Friday one, it should be dirt cheap to take this trade. If I buy the 23 and sell the 23.50, it's a 1-to-1. Cost me 24 cents to take the trade. It's going to be at 25.25. So you're risking 25 bucks to make 25 bucks if it gets a decent push. It's only supposed to go up about $2, and you need it to go up about 50 cents. Well, I guess about 32 cents. So it's doable. If we have a disappointment on Intel, then it's going to be a small loss. If we have a gap fill, I mean, we did come back below these 2022 lows. We're coming back into these. I mean, this is crazy. This is a daily chart going back to 2015. Here was what's wild is COVID lows are right here, and Intel was way lower than that. So I know that some people love Intel and saying like, oh, it's such a good value. I mean, I look at their discounted cash flow model and their fair value is like a $4 stock. So I'm not that bullish on Intel, and they might be, a year or two away from getting this chip thing under control and giving some, some heated competition to Nvidia. So it's just a trade. If I like it, I mean, I could throw a few contracts on to see if it gets above. But would it be easier just to, I don't know. I guess if it was a cheaper trade, let me see if I went one strike further out. So if I went here, yeah, I don't really like that. Yeah, I'd have to pay $22 to make 28. I have to pay 25 to make 25. If it was a bit more favorable for me to buy and see, I guess a cheaper debit, then I'd be more inclined to take the trade. Here's one on Snapchat. I do have some Snapchat exposure. Let me show you the positions here. So Snapchat, I do have some shares. I bought them around $11. They're not covered, but they are protected to the downside out to the 15th. So I'm looking to see on Snap, which is trading around 1079, if earnings is positive on Snapchat in any way that gets us back into a gap fill or this little liquidity level and good structure level. There's two really aggressive gaps here. So we get to like $12.75, or we fill this gap up here just around $14. That is good enough for me just to take profit. I'm not looking to do anything crazy on Snapchat outside of if we have somewhat of a positive push coming back to these major lows we've seen for the last couple of years, and we have some resistance around $17. I mean, look, I'd love to see a big surprise on Snapchat to the upside, but this is a trade that I took, posted this in the Pulver Alert section. I bought the shares. I bought an $8 put to protect. If it pops up into 12 and change or 13 and change, I'm just taking the profit. What I might end up doing on this trade is if we see a decent push to the upside, what I might do is put in a deep in the money covered call as long as it helps me grab a few extra cents of profit. So case in point would be this. Let's say that price on Snapchat rips up to like $12.50. Well, rather than doing a $12.50 covered call in the shares that I have, I'll just look to see if my $12 covered call is paying me a premium on top of that. If the 1150 premium or the 1150 cover call pays a premium on top of that. So something where it's like the probabilities it should get called away at the strike price that I am going in the money with, I'll see if that's maybe my play. And it might not be a lot. I might be able to get like 10 to 15 cents of extra premium, but that in a 1,000 shares gives me an extra $150. It's worth it. That way, if it's going to get called away or if I'm going to close out the shares, I get a little parting gift to go with it. So Snapchat is one I want to watch. This is aftermarket tomorrow, I believe. Yep, aftermarket tomorrow. And let's see if we pop up and just have a range trade. All right. So let's see if we can head up towards like 1250 to 1350. Wishful thinking would be a $15 or $16. If we had a $15 to $16 price on Snap, I'd be stoked because that'd be like a $3,000 to $4,000 per account profit, which would be completely unexpected. So we'll see. But we've been in a pretty tight range here with 850 support, which is why I bought the 850 put. And that put was out to the 15th. Yep. So I got myself a little bit of time just in case this earnings report doesn't give me, profit on the downside, but instead I take profit on the upside. Whatever. That's my exposure on Snapchat. So that is what I'm watching. So for this week, I mean, let me go through the earnings plays here. Take a screenshot. So I do have some exposure. I want to look at McDonald's. I think McDonald's would be fair to look at since we had a dip. I'd like to look at PayPal. So I'm going to put a green box. Let me use a highlighter here. I'm going to put a green box on things that already have trades running. So let's see here. If this pops up on my screen, Ford, I have some exposure. SOFI, I have some exposure. PayPal, I'd like to look at. I'll make that one yellow. McDonald's, I'd like to look at. Pfizer, I have some exposure. Let's see here. JetBlue, I have some exposure. Google, I have some exposure. Snap, I have some exposure. Chipotle, I have some exposure. Visa, no trade. Reddit, no. Chubb, no. That's an insurance play. I think Chubb's been big in Berkshire Hathaway for a while. I think that's an insurance company. Let me look at that one. Eli Lilly, that's sitting near all-time highs. I might take a stab at that one. Let me see what other ones I have for exposure. Microsoft, I already have some exposure on. Meta, none. Coinbase, I have some exposure on. Uber, no. Altria, no. Actually, Altria, yes. I do have exposure on that one. MasterCard, no. Norwegian Cruise Lines, it's already up. I'd like to see dips and pullbacks on CCL or NCLH. Amazon, have some exposure. Apple, have some exposure. Intel, not going to trade it. Chevron, ExxonMobil, I'll look at those. So let's switch this to yellow and see if I can sprinkle in some more. So PayPal, I want to take a look at. McDonald's, I want to take a look at. RCL, maybe. Norwegian Cruise Lines, maybe. As far as placing a trade, that's what I mean. AMD, that's Advanced Micro Devices, that's the semiconductor space, maybe. Okay, and then, I mean, so if I'm going to get all these yellows here, so PayPal, McDonald's, Royal Caribbean, those would be trades that I'd have to get today, which, I mean, I have time to do it. Even if I don't get it done in this session where I'm with you live right here, I can still look at the trades and do it before the day is done. What else? Eli Lilly, willing to take a look on this one. Same thing on Caterpillar. What else? Robinhood, maybe. Meta, maybe. Uber, maybe. Peloton, probably not. Let's see here. Estee Lauder, maybe. I'm not sure how volatile it is. Intel, probably not. And then Chevron and ExxonMobil. Okay. Dominion Energy, Charter Communications. I'll put those as maybes. Okay. So, I mean, I could make this a very busy week in earnings. My goal is if I go active with earnings, I want to keep the trade size and the risk relatively small. There's no reason to throw a bunch of trades out here. I know there's earnings, right? And it's a coin flip. Sometimes it's up, sometimes it's down. But if I have a few winners, great. What it does tell me in green here is, though, I do have some exposure that I'm going to be watching my P&L pretty closely. I've got protection on most of these. SOFI, if we're at 52-week highs on SOFI, that's a good sign. If we have another positive, I mean, it's a positive earnings print. That could be a good thing to kind of push a SOFI higher. That is one stock that I wouldn't mind getting rid of. I've held it for a while. It's positive on the year. I've been holding this thing. I mean, this is a stock that got migrated into this account, but I mean, I own SOFI in like the 7 and change, so I'm up a few bucks on it, which is fine. If we can get, I mean, 1126, we look left on SOFI's chart. Trading at 1127. I mean, it definitely has some momentum. I'm a little cautious of this resistance level right there. So if we hit it and we fade, like, well, that's just kind of a reset on SOFI. But if we are looking to push higher, I would be willing to let the stock go. I've said this now for the last couple of years. If we get back to this area right there with a spike, 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 and then a break, that's right around $14. I would be fine dumping the shares at $14, either issuing a deep in the money call for an extra premium or just letting the shares go because everything's uncovered. I guess to the downside, let me see what it's going to cost me if we have SOFI this week. It shouldn't cost me an arm and a leg to get the trade in. SOFI's earnings print is Tuesday before market open. So if we have a disappointing earnings on SOFI, I want to see if I can protect it. So let me see what else I have. I don't know if anybody else has SOFI with me. I think there's one other account that has SOFI. SOFI. That's it. I'm the only one. Okay, so SOFI, take a look. If I go out this Friday, I mean, the expected move is only $1. We're trading at 11.28. I could buy for $60. I could buy protection at the $10 put. Let me see what that's going to look like. So $10 put, we could get there. I mean, if we have a huge disappointment, I could turn a $10 put into some profit, and I don't mind sitting on the shares for protecting my downside. I think that's worth the risk. You know, I sacrifice $60, but if we go up, for every dollar that we go up, I'm making $300. So it's okay to protect, you know, for 22 cents out to this Friday. I'll go ahead and do that. So I'll go 10 and I'll buy, I'm going to cover all my shares. Yep. All right. So for $66, I'm going to protect my 300 shares. Just in case. Okay. And that way, if it goes up, same thing. I can either just take the profit on a nice little pop to the upside. For every dollar, I make $300. sacrifice that $66. That's no big deal. But if we go down, at least I'm protected where maybe my 22-cent debit can turn into whatever, let's say 40, 50, 60 cents. I'll make a few bucks on the put. I'll lower my cost basis by 30, 40, 50 cents, and I'll just sit on the stock a little bit longer. Okay, so that's SOFI. What else? Oh, let's look at Meta. Meta is sitting at 576. Is it possible for Meta to go down? Yeah, anything's possible. Okay, we haven't had really a lot of pullbacks here. I mean, is it possible to go lower? Yeah. Is it possible to go higher? Yeah. I mean, Netflix broke all-time highs, right? So I think for this one, I already have a ratio spread. I have an income trade. This is a 1-1-1. I'm willing to own the shares at a discount. So if we have a big miss on Meta, I'm watching. I'm willing to take on some shares. If we have a big burst to the upside, let me see what this would cost. It's going to be probably a $2.50 to $5 spread, I would think. The strikes are going to be about $2.50 to $5 apart. So if I went out, Meta is on Wednesday, Thursday. Meta is Wednesday after close. So Wednesday after close, if we went up, let's see what it's going to cost me one way or the other. So if I go Friday, if I buy and sell, so it costs me, it's just over a 1-to-1 reward to risk. So I pay 117, get 133. If I go for a bull call spread, I'd be buying the put, or I'm sorry, buying the call at 577.50 and then selling a call against that. I get $1.32 a profit if I'm going to risk $1.18. On the put side, I wonder what this looks like on the put side. If I buy the 575, sell the 572, same, $1.25. Fudge. I really wish it was back here. So I want to be lower to take that bullish trade. We're not, but it doesn't mean that we can't go higher. I mean, we could have this week. We pulled back to the 21. We're just shy of the 50 period. Let's see. I might be better off just waiting on Meta versus calling a direction right now. If we have a big miss, then I'll get in and take the same type of trade, or just do credit spreads, or wait for this 1-on-1 to play out. But I guess if we were like in this area, how we pulled back, I just want to see if we can kind of pull back first, and then I'll get long. So I think I'm going to say no to Meta for right now. So do I like it? Not really. I've had some good profits on Meta with earnings. Microsoft I already have. Coinbase I already have. Let's look at Eli Lilly. This one I actually might be willing to take a trade on. Fudge, I already pulled back a little bit. So from these recent highs, 8%. I don't know what's necessarily going to drive Eli Lilly lower outside of just some heavy amounts of profit taking. But if it was sitting at the highs, I'd be more likely to say, hey, let's take a bear call or a bear put spread, right? But we've already had a bit of a dip lower. I mean, this doesn't take much to go boop right back to the highs. I mean, I'd rather short it at the high as opposed to, like, if it's pulling back here, I want to be buying this thing. I mean, this was a big stretch from the August 5th sell-off. We come into just more chop. I mean, I'd rather be long and see if we establish a range versus calling the top. So I don't know. I'm gonna talk myself out of some because obviously I don't need to trade everything this week. Caterpillar. Let's take a look at this. CAT. Now this one, I could see, depends on the spreads. I could see a trade to the downside. The top is around $400. I mean, the stock has seemingly done pretty well since 2022. I mean, it's been in a pretty healthy trend, but up, pulls back, up, pulls back, up, pulls back, up again. If it's due for a pullback, I'm going to take a look at that one. Let me look at Caterpillar. CAT. So this one might not be, I don't want to go out necessarily super, super far, but I want this to be something within the next couple of weeks. If we hit the highs around 400, maybe I do this. Maybe I look at instead of an at the money, I'll get a little creative on this one. If I went out to the 15th and I do an at the money, so if I buy the 390 and I sell the 387, holy shnikes. Okay, I mean, this is almost like a no-brainer. I'm only paying 75 cents on the debit to get a $1.70 in profit. Now, granted, price has to go lower, but that's not a bad trade. Now, what I'd like to do is if I move this up to 400, is something like that. So is it possible for, all right, I think it's worth maybe looking at this trade here. If I pay 85 to 90 cents on the dollar, I'm risking $95 a contract to make $150 a contract. That's a pretty good reward to risk. Now, we obviously have to see price go lower and pull back. There's some gaps to fill in here. I think what I'm going to try to do is get this trade in. I'm going to take the price up higher. So if we get a 400, I'm going to buy the 400 put and then sell the 397.50. I'm going to get that for $1, which means my profit is $1.50. But I'm going to let price go up to that level before I sell it. Okay. So let me take a look at this one. The 390 by 387.50, that's not too. Now, wait a minute. That just jumped up by about 40 cents. Well, that's not as enticing as I thought. So let me do this. I'm going to try to get this trade here for $1. Let me try to get $1 debit. Now, this one may not fill. I might be asking too much out of this one. But if I get filled for $1, I'm looking to have a $150 profit for $100 risk. Price gets to go up a little bit higher to hit these same highs around 403 and then see if that's a rejection. So if we pop up here, hit resistance, and then fade, that's the trade I'm going to take on Caterpillar. So 400 by 397.50 out to the 15th. I'll take the trade pending at $1. Okay, so this one is a pending order. Right now it's trading for $1.28. So I need price to go up a little bit higher for me. So get these all listed. And then team, let me know if I got a bounce at the top of the hour. Okay, so just getting my trades in. Should have all these pending orders ready to go. 1, 2, 3, 4, 5, 6, 7, 8. Yep. Okay, in. So that's a pending order. I'll add the screenshots to this one. This is CAT 1115 expiration 400. Okay, so all-time highs around 403.75. Looking to fade all-time highs with a cheap debit spread. So $1 max risk per contract and 150 max profit per contract. All right, so those are in the Pulver alert section for A1 Trading Discord. By the way, I saw it got posted earlier. Give everyone a chance to register for a webinar that we're doing on the 12th in the morning. Nick and I will be doing a webinar to talk about our remaining plays for 2024, our big projections and forecast for 2025. This gets us through earnings week like this. This gets us through the election, the Fed, where the bond markets are doing. If we have yields up and bonds down or vice versa, we'll see what happens with these cuts coming for November, December. But that's going to be a lot of fun. That's November 12th. I think we're going to have there's the form popping up in the chat right now. So that is an invite only. So that's not a webinar you're just going to see on the live channel. You have to register for that webinar session. Okay. All right. So 400 by 397.50 pending right there. Okay. I will get in some other trades if I like them. I'll post them in the alert section in Discord later today if I like anything. There's still plenty of time. I mean, I don't have to force all these trades, but I will be going through and chipping away like, okay, do I like PayPal? Do I like McDonald's? How about Royal Caribbean, AMD, some of these yellow ones? I said I'm going to sit down on this one. I'm putting the trade in on Caterpillar. I'll sit down on that one for right now, but I've got some checking to do. So there's going to be a couple other trades likely sprinkled in to my alert section. And then let's check some top-down stuff. Right now, market still is pretty quiet on the day. It's, in fact, very quiet on the day, which is as expected. I mean, we have a calm day for Monday as the market just kind of slowly churning. We have a lot of earnings to come. So the market's likely going to create some gap higher, gap lower. We'll see what the overall earnings consensus is. SPY sitting near the all-time highs, not quite there. I do have some hedges going out for the next couple weeks to see if the market turns. If Mag 7 disappoints in any way, okay, if Mag 7 disappoints in any way, it has enough market cap and enough clout to drag these markets lower. Now, that's a big if. I mean, obviously Mag 7's been like this beloved group for a while. It started out as Fang T-Man, then became the Magnificent 7 to the, Elite 3 or whatever the heck people are calling them. But these stocks are pretty much cornerstone stocks, hallmark stocks. They're bellwethers. They're making a ton of money. But it just depends on, are they making enough money? How greedy is Wall Street now to be like, you guys aren't growing fast enough, so we're going to push your stock lower. All right. Nasdaq had a bit of an outperformance last week. Still not at all-time highs, but looking better. We do have some semiconductor plays this week. Tesla was probably a big contributor to that last week. Look at the Dow. The Dow had a pretty nasty week. Last week was a big fat red candle on the Dow. But I kind of like where it's at just for the sake that we have a 50 to 100 period. If we get a pullback like that, I'm kind of liking that again, like the deeper pullback or the slingshot like we had back in August. So I'll be watching the Dow. Russell, same type of thing. Russell's up on the day, which is kind of nice to see. Do we break some recent highs? We'll find out. Do we pull back deeper into these moving averages? It's pretty well supported, right? It's pretty well supported. So if we pull back, I'm still looking to buy some dips on Russell. If we go to dollar starting to get a little bit choppier here near the highs. So this is a good spot to be watching for. If this pauses, okay, does the dollar end up showing some weakness? Does the dollar show some strength? I don't know, but that's something to watch. The dollar could set us up for this is the swing. I thought we would do a little bit better job of rejecting in this area that I have the yellow box on, and it didn't. So I'm waiting to see what happens. But if this pauses, look for some noise in here. But if we end up making some clean breaks, risk appetite towards the end of the year, dollar weakness makes some sense to me. So I want to keep watching the dollar from that standpoint. Oil, I'm not touching this oil stuff. I think that we are putting so much pressure on this floor that if this floor breaks, the positive thing is inflation goes down if oil breaks the lows. The downside is we've got conflict, geopolitical tensions, war, all this stuff could happen. If oil gets too cheap, it's only the US and Saudi Arabia that make money. Everyone else is going to hate lower prices. Now, we might love lower inflation, but I don't know. There's just so many potential um, consequences with like super low, cheap oil prices when we don't really have an alternative. Everyone's talking about nuclear energy and going back to, uranium and there's shortage of supplies, but we're a long ways from making that like a full adoption. I mean, I feel like solar and wind, it's slowly adopted, but certain areas, utility companies make it impossible to do it. I mean, I've got a friend that lives in California that has solar on his cabin, and basically he couldn't justify it. I mean, looking at like a 10-year, it take you like 10 to 15 years to recoup what you put into it, and then I don't know. It hasn't taken alternative energy hasn't taken the same way. So I think it's inevitably going to have to happen. But right now it's like oil, I think makes me a little bit nervous at the floors that we could just break it. So I'm not trying to call bottoms, even though it's well supported. Risk defined is fine, but I'm not calling bottoms here. Same thing on CL. And that's part of the reason I stayed out of the trade is because I made a lot of profit on oil just trading CL. because it's, futures contract. So I'm, risking maybe $500 a contract to make like $600, $700, $800 a contract, which works out favorably. But if this floor breaks, I mean, that's an easy avoidance. So I'm just going to stay out of it for right now. Gold and silver, and then I'll wrap things up here in just a few minutes. Gold is at 27.42. We're just off all-time highs. I'm still waiting here. Like, if the market keeps going higher on gold, I'll just watch the portfolio melt up with the position that I'm in. I'm not adding aggressively at these highs. I want to see a dip. I want to see a dip. I want to see a pullback. That's it, man. That's it. It's that simple. If I'm going to add more to my gold position, it's not at all-time highs. It's that simple. So if we have a pullback, I'm going to add. If we don't, I'm going to watch it melt up, and I'm going to watch my portfolio go higher with the position I've already established. I was long in gold way back here. So I don't need to be greedy sitting here at all-time highs hoping it goes higher. I had gold in here, I added, and it's just been watching positions just pay out. So I don't need to be crazy. I want to see a dip or a pullback. Okay, silver, same thing. I want to see a dip or a pullback. If I don't get one, well, I measured my profit up here. I've got ownership of SLV. I've got some futures contracts as well. If I hit my measured move, I'll take some profit. It's not that hard. So I want to add to both gold and silver. Silver is probably a better space because I think this is where we ultimately get towards like $46 or $47. So if I can add on dips here and this continues and continues and continues, then silver to me has more measurable upside than gold. Gold is just at all-time highs and it's going to continue to be momentum. But silver at least has a technical measured move to 36 and 46 that I can play on the chart, which is why I'm in it. Okay. All right, Bitcoin 68.6. We're back up in the same little choppy zone. Watching it, let's see what happens. If it breaks higher, watching this area on Bitcoin. So nice little push up. If this is a bull flag, bulls are going to have to make another fresh break above 69 or 70,000. Do we get back to 74? Do we break 74? 74K, if we get above it, everyone's going to start talking about 100K. It'd be an awesome way to cap off the year. If we had to move towards 100,000 on Bitcoin, that'd be awesome. Okay, if we don't, then we don't. But we'll see what price gives us. I mean, again, same thing. It's like all the exposure and accumulation in here. If it goes up to 100K, great. Am I adding at these highs? No. If we have pullbacks towards like 60 or 52, I'll probably add some additional exposure on Bitcoin. Ethereum, is it going to follow suit at all? It's a long ways from 28.15 right now, but that's where I want it to be. Copper, staying out of this for right now. Nikkei, big rip on Nikkei today, but still, really choppy after that fall from July to August. DAX is off all-time highs. FTSE still sideways. HSI is up 0.65 today. Let's see these other stocks. HSI, so BABA, decent little candle on the move, stabilizing around that 50% zone. Baidu, big pullback towards the 786. Let's see what happens if this one stabilizes. That's part of the reason my P&L is up so much today. I'm showing 31.5 in P&L on the day. That's good. That's a new fresh high for the portfolio. But a lot of that's attributed to just to come back in China. I'm still not out of profit. That's a floating P&L. So, but if China gets back into near these highs we saw back in early October, then I'll likely be looking to protect and take some profit. FXI, some credit spreads in here. KWeb, I don't know. It's showing this is good. This is not a bad sign to see green in China. 41.64. I could get this called away this week. Let's see what it is right now. JD. I've got a covered call at 42. It's trading at 41.61. This is out to this Friday. If I make this trade a winner, I'm going to get this called away for like $1.18 or so, I believe. Let me double check that. So check my break even on JD. It should be like $1 something. $1.18 per share. So if I make $1.18, it should be like $600. Yep, $590. So let's see. I want to look at this really quickly. So there are my shares. That's 1, 2, 3. So this account, JD. So I have the shares. I've got the cover call at 42. Then I have some income plays, which are going to be mostly in profit. Those are a ways out. Let's see here. Let's go 42. If I roll this, let's do a quick roll. Right now, if I roll it out by a week, I get another 90 cents credit. So I can keep the strike price the same. If I roll it down, I get $1.15. So I lose out on 50 cents, but I make 65 cents and I lower my cost basis. I think I'm okay just letting it get called away. I'll think about this. I could do a roll. I mean, this gets me another $500 or $600. So what I would be doing here, so if I do this covered call and I roll it out by a week, I get 92 cents. So if I've got 92 cents at 500 shares, that's increasing my profit potential by about 500 bucks. Now, obviously that's good. But if JD doesn't cooperate and it goes down, I mean, my goal should be lowering my cost basis overall. So let me let that marinate for the morning. I'll think about whether or not I want to roll it because I'm going out farther if I do. So we'll see what happens. I don't mind it getting called away this week, and I can always get back in if I like it. Okay, EQIX. Is this Equifax? Equinix. What is this? It's a REIT. Not bad. World's digital infrastructure. Okay. What do they do? I mean, all-time highs I don't love. Pushing higher with their earnings today. Earnings tomorrow or earnings Wednesday. Is this Wednesday morning? Wednesday after market close. Let me take a look at it. This actually might be a decent play. Let me go EQ. Okay, well, number one, they have monthly expirations, so that's not great. And they also have $10 wide strikes. That's not great. So to me, that one's untradeable. I'm not taking a trade on that. Even if I put this trade in, let me delete this leg. If I bought the 920 and sold the 910, I mean, I'm paying 575 to get 425. No thanks. So it's just the monthly expirations. It's too much time, and the spreads or the strikes are $10 wide. I'm not trading that. If it was a weekly expiration with a $1.50 to $2, then I would take the trade and look to see if we gap fill at these highs. But I'm not taking a $10 wide. That's silly. All right, CLLT or CTLT. Catalent. No idea. Pharmaceuticals. Okay. I mean, double bottom I see back here in late 2023. CTLT. Doesn't look great. It's cheap. It's overvalued. I'd say no. Best opportunity would be if we came back into these lows. Boop. Maybe it never happens. But yeah, I mean, based on this, I'm not touching that thing. It's trading at $60 as fair value, discounted cash flow at $11. No thanks. A $2,000 stock. What do you want to do with this? I mean, you can always dollar cost average something you like. Retail trade, internet retail. What does this company do? MELI. I mean, it looks pretty good. Snowflake wise, checks a lot of boxes. That's good. See price to earnings, price to sales. Price to earnings a little rich. 5.7% undervalued. There's still some growth there, but it is way higher than its peers. Wow. Price to earnings is way higher than its peers. Alibaba, JD. I mean, if that's competitors, whew, if it's competing against like Alibaba and JD.com, I'd rather trade those and take my chances on dirt cheap. I mean, China's been beat down into the dirt for the last couple of years. Pretty much post COVID, it's been uninvestable. So if I just think there's more upside potential on, percentage wise, JD, Alibaba, I'll take my chances on those versus getting into a $2,000 stock. All right, last one, and I'm gonna wrap things up. Now we get back to looking at some Fiverr. Oh boy, I know some Fiverr. All my little gig economy guys and gals, some graphic designers. Let's have a look at it. I mean, it looks good. A little high on the price to earnings, but I like that. Has some runway for fair market value with discounted cash flow. Wow, that's crazy. Pure average 18.4, price to earnings is 67.2. I mean, it looks like it's dirt cheap based on the technicals, but it's not. Huh. That's pretty crazy. I mean, something about it, like they haven't monetized it well enough, but I mean, there's upside potential. I just don't like it is way more expensive on a price to earnings side compared to its peers. But fair value is up there. I don't know. I mean, if you like it and you're willing to take the risk, then maybe a call option, maybe an out of the money call option. I mean, who knows, right? But I would pay like less than $1,000 if I'm going to take a risk on something. Pay less than $1,000. See if it can pay you 2, 3, 4, 5 times that. Maybe that's the swing you want to take. But I don't think it's going to be liquid enough for like, really aggressive plays inside this chop. More than likely. Okay, DJT, I'm not touching that stock. I was actually asking earlier, like, it just seems like a total conflict of interest to have a sitting president that's got himself tied to a stock that has been, completely volatile since he took office or left office. So I don't know. I'm not touching DJT. Spirit Airlines, what is it? Free? No. What's Spirit Airlines? Save. Up to $3. So I looked at this trade with everybody a couple weeks ago. If you followed along here, that would have been a winning trade. You buy the shares, you sell the 250, you walk away with 38 cents per contract. That would have been an expiration for last week. I mean, again, it's a bit of a long shot. I mean, probably not my favorite airline to trade. I still have some exposure on JetBlue. Delta's been a better one. United Airlines actually might overtake Delta as one of the more profitable airlines, but I mean, it's inexpensive enough. Like, can we get to $3 up to $5? If so, I wouldn't hang on to Spirit that long. I would say if we get $1 or $2 of gain, I would be out of it. So I don't like it that much, to be honest. So I do have exposure in. I have UAL. Okay, which has been on an absolute rip since this low in August. It's crazy. Delta has benefited from the same thing. You look at AAL, American Airlines, same type of rally. I've got some cash secured puts down here at $8, which are looking pretty good for full profit. And then JetBlue, the little engine that could, we're trading up to 745. I'm looking to see if this one has a squeeze up into some good structure in the teens. But it's if you like Spirit Airlines, it's more of the, do you get a little push of momentum to get you another $1 or $2, and I'd be out of it. I'm not looking to hold that thing now. Gold buy now? No. Gold, I want pullbacks. Okay. All right, everybody. I'm gonna let you go. I got to jump into another session at 11:30. So look for some more alerts and updates coming later on today. It was really all about earnings. I'll be cost effective. I'm not doing anything crazy to pour out a bunch of capital, but try to pick some good earnings plays. See what happens. Okay, sounds good. And two things you see in the chat. If you want my alerts, you want my trades, you can sign up. If you want to join that webinar with Nick and I on the 12th, sign up for that webinar. And we got a lot of stuff to discuss. And let's finish this week, next week. Like, these are two extremely important weeks. If we can get through this without doing anything stupid, then we should hopefully find some clear direction by the end of the year. Good, bad, and different. Whether it's up or down, we'll figure it out. But we give ourselves the freedom to just let price do what it's going to do. I think it's going to be very interruptive this week and next week. And after the dust settles, then we can start making some decisions and hopefully see some clean direction by the end of the year. Okay, I'll let you go. Thanks, everybody. See you tomorrow.
Thank you for watching today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you tomorrow.